Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business podcast. Today we're going to take a look at some Latin American companies, taking a look at an SPAC, which is a special purpose acquisition corp. To help us unpack that blank check company is Katrina Glogowski, angel investor and attorney. Katrina, thanks for being back on the podcast.
Hi, Josh. Thanks for having me.
Yeah, let's take a look at Latin America first because they've got really good terroir, they've got really inexpensive labor, and yet it seems like a lot of Canadian LPs are leaving the scene. So let me kind of lay out who Clever Leaves are and why it would be advantageous to be a part of it, which will kind of help maybe try to explain what's happening and why they're needing to go to a blank check company, which we'll get into. So with operations and facilities in Colombia, Portugal, and the United States, Canada, and Germany, Clever Leaves is a vertically integrated multinational cannabis operator. The company has successfully developed a low-cost pharmaceutical-grade cannabis cultivation and extraction platform operating under Colombian good manufacturing practices for cannabis production. Clever Leaves also is in the process of becoming one of the few cannabis companies in the world and the only cannabis company in Latin America to be granted a European Union good manufacturing practice certification for extracts, subject to successful completion of the certification process. The company currently cultivates over 1.9 million square feet of greenhouses, making it one of the largest cannabis cultivation and extraction companies globally, while operating at a fraction of the industry's average production cost. Clever Leaves employs a staff of approximately 500 globally and has raised approximately 120 million in capital to date, including substantial debt and equity investments from leading institutional investors with a demonstrated track record in the cannabis sector. So they know what they're doing. They have some standard operating procedures. They're in a decent area with, like I said, really low labor rates and really good places to grow where you can have multiple seasons. And yet it seems like all of these LPs are bouncing. So that's an interesting point in of itself. They were all kind of interested in Colombia and now they're leaving, and Clever Leaves was kind of like that golden child to take an opportunity from, and yet they're not. What's up with that?
I don't know the answer to that, Josh.
I don't either.
A year ago, everybody was scrambling, busting their butts to get into Colombia. Aurora was in Colombia, Tilray, Kronos, everybody was in Colombia. Canopy, and they were looking at Colombia as the production center, the growth area for their cannabis products, given the incredibly low cost of goods sold. I've heard 10 cents a gram, 15 cents a gram. The cost of goods sold down there is ridiculous. And as you mentioned already, they can have outdoor grows much cheaper than the greenhouse grows in Canada itself. Also, they were on the path to becoming let's say acceptable, right? You have this stigma attached to Colombia, but they were legalizing, the government is behind them, and they wanted to have a legit cannabis crop that can be tested and verified and traced. The Colombia government was really pushing for a legitimate cannabis market, which allowed these big corporate players to come in, fund it, and try and make it happen. Fast forward, and it collapsed. Like everybody, all the main players are pulling out of Colombia. And quite frankly, Josh, I don't know why. Then you look at this article with Clever Leaves, EU GMP certification in Colombia. That's huge. That is huge. That is a game changer because now with an EU GMP certification, assuming they get it, which the article implies it's forthcoming, they can dominate the EU with their 10 to 15 cent a gram cost of goods sold. I don't know why it doesn't work. So good on Clever Leaves for pursuing the open, transparent, and certified manufacturing process.
I'm going to speculate and just say, based on what I've read, and I'm totally guessing, I have no there's no proof behind this, but I'm guessing it has something to do with regulatory risk, meaning there's companies that don't want to put a lot of investment into an area that is unstable politically. So it's either that or there's an unforeseen tax. If you go to Japan, a lot of people will tell you, oh, you don't have to deal with the Yakuza. They're a part of the government. They're definitely there. They are a tax you have to pay whether you like that or not. I'm guessing there's something similar down in Latin America. There, if you go to Puerto Rico, for example, you're going to pay a transportation tax to the local union, we'll call them. Same thing with Vancouver, BC. The Hells Angels are not going to let you do business unless you pay them a tax. And there's, this is hearsay. This is speculative. I don't have proof. I'm just saying that from my international business experience, these groups, these organizations exist, and they are unforeseen taxes that some companies don't want to deal with. So if it's not directly tied to politics, politicians, bureaucrats, whatever, then there's the next level of organized robbery, which is, some of these groups down there that aren't directly tied to the government, but they still want to take your money. Those are the two things that I'm looking at, because otherwise it makes absolutely no sense why you wouldn't utilize this. It has to do something with unstable government and or unforeseen taxes.
I think export might also be a challenge. And that might come in the form of a export tax that you don't anticipate, which I'm hesitant to say that there's unforeseen taxes, because I know the Colombian government is very much pushing this. Cannabis legalization is one of the linchpins of the future growth of Colombia as a country. But I also know that there are many stigmas attached to it. And I also know getting cannabis goods halfway across the world, transportation wise, is still a challenge. And it's a challenge from packaging. This product needs to be fresh. It needs to be kind of babied through the distribution process. You can't just throw it on the back of a truck and have it show up somewhere 5 months later because it won't be any good. So now take the packaging and transportation challenges and then multiply them by 40 different countries in the EU, all of which have their own import-export regulations. And so I think, without knowing the problem in Colombia, I think that the corporate universe ran into a lot more problems than they expected. Some of them regulatory, some of them unexplained, and some of them these individuals that are growing in Colombia have been growing for a very long time. So think of Humboldt County in California. This is the way we do business. And then somebody comes in, and that somebody could be the government, regulator, and inspector. Somebody comes in and says, no, now you have to do it this way. That might be part of it as well, because like many areas, Colombia is not unique in being a drug producing area. We have them in the United States, and we have them in Canada, where drugs were historically produced by individuals in a certain manner. And now you want to regulate that. And Josh, I would challenge you to ask Humboldt County how that's going.
Yeah, huge black market in California. So looking at Clever Leaves' exit strategy, it's not really going to be working with LPs like they thought. They were making themselves out to be a potential acquisition target, but for whatever reason, they've kind of been left alone to play in their own sandbox. So they're now looking at a specialty purpose acquisition corp as an exit strategy. So some companies in the US and Canada will do an RTO, which is a reverse takeover. You can buy a publicly traded company that it really isn't doing any business any longer, and you can buy them out and then just change the name. So we were seeing that in the cannabis industry Probably 10 years ago. That was a really early way to get in. And now some other companies that's their sole purpose, is to be a blank check company and buy some distressed assets, of which we've been talking about with strategies and opportunities. But for those that don't really know what a blank check company is, taking a look at a specialty purpose acquisition corp. This particular one, they're a blank check company formed for the purpose of entering into a merger, stock exchange, asset acquisition, stock purchase, recapitalization, reorganization, or other similar business combinations with one or more businesses or entities. So with that specifically, they have a special situation and event driver securities where they've invested over 3.2 billion since inception, with a notable track record through its active investment strategies. Now, obviously wanting to focus on cannabis with Latin America within their target. So obviously there's some opportunities with distressed assets. Somebody's looking at Latin America long term. I think it's a really good play. I don't think Canada is going to be able to grow outdoors. I think if it's politics or whatever, once they figure that out, this is still going to be long-term a global player.
I agree. I have talked about this before. You do not grow avocados in the Pacific Northwest. You import avocados to the Pacific Northwest. And yeah, you could grow avocados in a greenhouse if you want to do such a thing. But ultimately, the legalization of cannabis is going to drive corporate America into cannabis, and the cost of goods sold is going to become paramount. Just like our clothing is manufactured overseas because it's cheaper, cannabis is going to be grown somewhere else. It's cheaper. And it has, that's not politics, that's corporate America. Show me the money, all of this type of stuff. And Colombia is a perfect location for that, as is most of Latin America, quite frankly. But Colombia came out of the gate very early, pushing for this cash crop as a way to save their economy. So I don't know. I don't know. I wish I did. I did the very first seed exportation deal out of Colombia, bringing some of these heritage strains into the United States. But other than that, I haven't seen a big deal. A big recurring volume deal of cannabis crossing the border on a routine basis. And maybe that's the problem. I don't know.
I don't either. You have to come back to the Talking Hedge and find out. But I do want some of that Colombian gold strain, if they got some of that OG.
Sunseeds.
Right. Yeah, we'll put our address down there. All right, well, we're going to make like a tree and leave. So with that, we're going to roll this one up. I want to thank my guest, Katrina Glogowski, angel investor and attorney in Seattle. Thanks for being back on the podcast.
Thanks, Josh.
This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.